Today, I want to talk about Cohen and Gamestop's 5D chess checkmate move. You may have seen a few days ago, GameStop just announced the ability to invest in other companies, and I've spent days racking my brain trying to figure out why. And I've just realised the perfect reason, which is Global Links Corporation. So stay tuned and let's make some money. And now we'll dive straight in with the key information. So, user of Intellect tweeted about the major GameStop development, saying the company's board of directors just approved a new investment policy, read GameStop Hedge Fund. So that gives Cohen, the chairman and CEO, the authority to manage the company's securities investments and invest in different companies. Additionally, Cohen may personally invest in the same companies as GameStop, aligning his interests with those of the company by sharing similar investment risks and decisions. Now, user of Intellect also went through and digested the company's 10Q form, which describes the company's new investment policy, allowing Cohen, potentially with the help of assistants and management committees, to invest in new companies and to invest in other companies and their listed securities. Now, as I said, I think the reason Cohen has done this is because of Global Links Corporation. If you're a real OG back from 2021, Global Links may ring a bell. If not, let me explain who Global Links actually are and what happened there. So this article from 2005 was about shareholders and executives in some of the US's smallest listed companies who believe their share prices have been forced down by illegal synthetic shorting. That's led to a number of lawsuits claiming unscrupulous behaviour by brokers and market makers, exploiting loopholes in the central clearing system. Now, this article right off the bat sounds like it was written in 2023, but it was actually written all the way back in 2005. But in February this year, a Michigan-based entrepreneur, Robert Simpson, decided to see what would happen if he bought the entire stock or the entire float of one small company. Using a single broker within a couple of days, Simpson had paid a little over just $5,000 for over 1 million shares in the OTC Bulletin Board property development company, Global Links. According to Simpson, these shares were delivered into his account shortly afterwards, likely on a T+2 trading basis. But yet, the following day, 37 million shares of Global Links were traded on the bulletin board, even though he owned every single one of the 1.285 million shares. This is a company with a 1.2 million share float, with 0 shares available to trade as they're all being held by one guy, Robert Simpson, but yet 37 million shares magically traded. And the day after that, another 22.4 million shares were also traded as well. And on neither day had Simpson traded a single Global Link share, he insists. And what's even more weird is that Global Links only had a float of 1.158 million shares, but yet Robert Simpson managed to buy 1.285 million, 126,000 more shares than what should actually exist. How he had managed to be sold more shares than actually existed is the exact question Simpson hoped his foray would raise. Now, obviously this happened back in 2005, before Reddit, before AMC and GameStop, before the meme stock frenzy, before investing was publicised and mainstreamized, and before social media platforms like Twitter and like YouTube. Obviously, this mishap was simply brushed under the rug. But what would happen if the exact same thing occurred in 2023 and Cohen was at the helm steering the ship? I also wanted to go through today's brilliant trade from the Millionaire Mindset Trading Group. You can see here in the pre-market, I alerted JTAI and said to set your price alerts and wait for the break of $2.59 to jump in. You can see when the market opened, that $2.59 level ended up breaking and continued pushing upwards for a 45.8% gain. And you already guessed it, the group capitalised with Jamin taking his first trade and locking in a 20% gain. Icon also locked in a 15% gain, Keeley locked in hundreds of dollars worth of gains, and RJ's took a slightly different trade and locked in 51.39%. If locking in daily gains every single day of 45% sounds good to you, be sure to join the Millionaire Mindset Trading Group using the link in the description below. What if Ryan Cohen goes out there and finds a small cap company, potentially in the New York Stock Exchange or in the OTC market, that's got a fairly small float or a fairly small market capitalization? What if it's just a few $1,000s or a few $1 million and Ryan Cohen buys up every single share in the float? Or somehow manages to buy up not just 100% of shares in the float, but 150%, 200%, 300%, or maybe even 10 times the float? And then what if he exposed that massive purchase on social media or in GameStop's next 10Q filing or 8K filing? I wonder how it would look if somebody with 381,000 followers and many other meme stock followers around the world was suddenly tweeting about a company he'd just purchased 200, 300 or 400% of the float of. Now I feel like that's something that couldn't be hidden by the mainstream media and couldn't be ignored by the SEC. That could potentially be Ryan Cohen's 5D chess checkmate move to expose the crime we've all been trying to expose and provide proof of. Nothing spells proof like GameStop as a company itself buying 300% of a company's float and publicising it in their 8K filing or all over Twitter. And speaking of that Global Links Corporation stock, check out its stock price chart from Yahoo or from Google Stocks when you set the time to max. You can see around that time period in 2005, the stock went from being a penny stock to suddenly trading at over $1,000 per share. So it seems at least at some point Global Links Corporation did experience that short squeeze, going from trading below 1 cent per share to over $1,000. And then obviously very quickly back down again after that short squeeze had completed. It looks like the short squeeze had taken place sometime in June 2004, but by August 2004, the price had resumed back to normal. Now what really annoys me is the fact Gary Gensler is still doing absolutely nothing about Ken Griffin's manipulation. This is why I think we need Ryan Cohen or someone with a massive following to expose synthetic shares with barrels of proof. Nate tweeted saying Ken Griffin is on tape lying to Congress and admitting that he and a few hedge funds control the stock prices as they see fit. And Gary Gensler is literally letting this live interview slide, saying, Gary, it's literally on a live interview, it's literally on tape. How on earth are you letting Ken Griffin still get away with these crimes? And Busy Brands has also tweeted this video of Tom Ronk explaining how market makers lease their licenses to other entities to counterfeit US securities without any oversight. Basically allowing other entities and other hedge funds to use their bona fide market maker exemption to short sell securities and create counterfeit shares without any issues.
The market makers are allowed to lease out, rent out their market maker ID code called the MPID, and they can listen out to any entity that wants to reflect themselves on an order management system as a market maker. So why the heck would a third party globally, can be onshore or offshore, want to pay millions of dollars to one of these 300 market makers so they can a market maker? It's not arbitrage, guys. It's so they can go in and short stock. They take in all the proceeds from those shorts, goes right into their operating accounts, and they just keep that money until somebody comes along a month, a year, 5 years, 10 years, never later, and say, hey, you're supposed to cover. Having this new case on September 29th, the Harrington CIBC, where each broker-dealer, and you have to be a broker-dealer to be a market maker, each broker-dealer is now responsible, and we can go back. We have trading day going back.
Now, what's really interesting about that clip is where Tom Ronk is also talking about the recent case where trading platforms and brokers are now responsible for what their customers are doing, and saying they can now go back in time to when these brokers leased that market maker exemption and synthetically sold tons and tons of shares and never covered. So hopefully there's going to be many more lawsuits of these brokers abusing their powers illegally. You may have also seen, as tweeted by Crystal Ball, that SEC leaders with nearly 50 years of experience have quit under Gary Gensler's tenure. He added, saying, yeah, it's because they don't want to be associated with Gary Gensler when rubbish hits the fan, probably next year. All of these high-ranking SEC leaders clearly see what's going wrong with the market right now, and that Gary Gensler and the rest of the SEC aren't fixing it. That obviously exposes them to massive potential issues, especially when it all ends up collapsing, as Crystal Ball said, likely next year. That's why many of these leaders are getting out, so they can say next year, when it does all end up going head over heels, that they warned Gary Gensler about not doing anything, and that's why they had to leave, as Gary Gensler wouldn't listen. It seems that many of these top leaders that actually want to see change are being put off by Gary Gensler so much not implementing change and bending over backwards for those hedge funds that they're being forced to leave. Now, Crystal Ball also tweeted about AMC specifically, saying with 10 earnings beats in a row and with bankruptcy off the table and new business lines coming, AMC is now not a meme stock anymore, but a successful company. He said having a big debt load doesn't make a stock a meme stock. Many big companies have huge debt loads, and many of these companies even have negative assets because they have more debt than they have assets. But obviously debt can be deferred, and as long as these companies are profitable, that debt will always be paid off at some point in the future. I've actually touched on this beforehand with some prime examples being Domino's, McDonald's, Starbucks, and many others. Many of these companies have more debt than they have assets, but I wouldn't consider any of these companies failed companies imminently about to go bankrupt. They're some of the most successful companies in the entire world. The reason why these companies have so much debt is because those companies are very capital intensive. They have to take a small shop or warehouse and completely kit it out with state-of-the-art technology, costing hundreds of thousands, if not millions of dollars. Yes, these individual shops rake in profit and make money hand over fist, steadily paying down that debt. But obviously, just like with AMC, it's a very capital intensive business. It's not like buying a small warehouse and just putting a few shelves on the walls. AMC have to completely kit out that warehouse to make it a cinema. AMC is very capital intensive, and that's why it has lots of debt, but debt can be deferred, debt can be paid down, and debt does not make a company a meme stock. So guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.